Welcome back to another market update on today's episode of how the rate cuts are no longer cut. Let's give you guys a 3, 2, 1 on what's going on. I'm going to have some notes I took. There's quite a bit of talk in town on this. There's a lot of things going on. So pretty much the Fed met and the job report came out, and the job report came back positive, came back at 353,000 new jobs. Projected was 180. So they're saying, hey, the economy's hot. Things are popping. Economy is moving. So now they're saying, wait, if the economy is doing so good, the recession is behind us. Yeah, the recession we said we were in like in December, like no longer on the table. So we immediately saw rates react, and rates went from 6.62 yesterday to upper 9s, 6.95 or something. So right around the 7% range is where we're at. And the Fed won't comment on the rate itself, but they did say this: the rate cuts that they were planning, the 10 in the next 3 years, 3 this year, 4, and then 3. The 3 this year are now on the table for discussion. And I quote, they said, we're going to follow the data. I don't know about you, but follow data sounds like trust the science. We all know what happened there. So where does this take us? What's going to be happening? What are we going to see rates go up now? Are we going to see rates drop in the near future? What's gonna happen? Well, that depends on what they say on their next meeting, which is in March 19th, where they will be following the data and will let us know on what they plan. They're gonna have to regroup and say maybe we don't do any rate cuts at all until the elections are over or after. I don't know. Guys, I know these last few years have been really tough on the volatility of the market. We've been up, we've been down. And the reason why this is important to watch is because things are changing every single day. If you are a seller, this affects you. If you are a buyer, this affects you. Unless you are a cash buyer, hard money person, investor, this may or may not affect you. The only way it affects you is the inventory levels. But in a nutshell, because of the volatility, you can either be in a very good time or a very bad time to buy. So you have to watch this stuff, and you can't plan for the best scenario. You can't always win. You cannot have low prices and low rates and just be a winner all the time, every single time. But you do have to look on what's ahead and try to plan, and that's extremely difficult right now with how volatile things are going. So I want to give you the information that's been out there now, and I want to give you guys a way to interpret that information. Again, strong job market means that there's more demand, means that the economy is doing well, which will mean that they're going to increase rates. And if the job market is weak, there's less demand, they need to boost the economy, and so they will lower rates to boost the economy. In short, whatever they say, not necessarily what they do, but whatever they say determines what happens with the rates. Another thing that's kind of interesting to note, maybe not create a whole conspiracy theory, but take it as you may. They went back to December's numbers and said, hey, actually, there weren't 216 new jobs created, 216,000 new jobs. There was 333. Now, I don't know about you, but my bookkeeper would have a lot of questions for me if I went back from my previous year and said, actually, I made another $100,000. Here. Just put the number in, just to try to readjust the following year. I don't know. A little fishy, as expected. We don't know where it's going, and I could say it's doomsday, and all things are going crazy. Rates are going to go up, and we're screwed, and we're going to be in the next biggest crash of the decade or era or whatever. But that's not necessarily going to help people, because we don't really know that that's the case. Because in December, we got some really nice, huge cut from 8% to 6%. And like I did in my last video, I told you that it was a great time to buy from December 15th to the end of December, because of we knew where we were going to be in the next 2 weeks. As we hit spring and summer, more people and more demand is coming. There's going to be more people looking, just like you, that's watching this video, which will mean you will have more competition. So this is what I want to say. If you are a buyer and you need to buy this year because your circumstance with life changed, you need to move, you need to make a change, you're moving from out of state, you're going to be buying. don't focus on the rate, because my lender, if you're working with a guy that I'm working with, they will do a free rate decrease down the road for you, a rate drop, or sorry, a rate refi for you down the road, which means you pay nothing to get that. So don't worry about the rate right now if you have to buy. Focus on the home, focus on that transaction and deal, and your agent being a master negotiator with you. Because that's going to make or break it. They're either going to show all your cards and just to get the closed deal, just to get some bread on the table, or they're going to work for you like they work for themselves. So know who you're working with. A lot of people still aren't reliant on rates right now. Some people are doing hard money. Some people are moving cash around, and they only need a $300,000 loan, not a $600,000 loan. They're selling something and moving funds over. So that's going on right now. I have a client right now who's moving from Texas. They're going to be moving regardless of what's going on with rates, regardless of how volatile things are going. They're changing jobs. They're changing locations. I specialize in relocation, and I do a ton of that every year. And those people are going to have to move and buy. So the only thing you can really do for them is get them some great negotiating terms and get the best price for the home. And we are in that zone right now where there's a lot of people moving things around, moving either their assets around, either upgrading or downgrading, and or moving states. So regardless of what bracket you're in, if you are a first-time home buyer, I know it's been very difficult. And I could tell you to trust the process and trust the science and follow the data. But the reality is the only thing you can be really doing to strengthen yourself right now is to have a good size amount of cash for both closing and for post-closing, because we don't know where we're going to be a week from now, a month from now, and a year from now. So first-time home buyers, let's sit down and talk more, look at your full circumstance and see where you're at and where you need to be and help you with that. And if you are a seller, demand is still there. And the reality is I do comps every single day for clients. And the reality is there are not a lot of great homes up on the market right now. So if you need to sell, you are most likely going to get a lot more clicks and views on your property right now versus summer when there's more competition for you. So again, there's many ways to list your home with making terms in your favor if you are selling your home, and many ways we can increase your negotiation power when it comes to buying. So for all your buying and selling needs, give me a call. If you want to talk about numbers in more detail, just shoot me a text, shoot me an email, drop a comment, and we'll go from there. But until then, I'll provide little updates on my Instagram. Make sure you're following me. And on the biggest updates, especially the one coming up on March 19th, make sure you tune back and check on where we're going to be. Until then, guys.